important factor when the base rate comes in. I think that's where I think it will get factored, and unless it is done earlier to that.
So broadly, with the 100% hike in
base rate, just a follow-up question. The new circular that came out on base rate, any discussion on that, and the bankers more or less satisfied? No
I think
problems
today we didn't discuss on base rate. I think we had a lot of discussion on base rate, and final circular.
So no demand to extend that timeline.
So broadly, with the 100% hike, 100 BPS hike in CRR over the last two policies, we have already seen the surplus liquidity coming down. And with the investment demand and the credit demand, which we foresee in the next quarter, and Chanda ma'am also said that second quarter starting we'll see the credit demand picking up. Do you see some amount of pressure on the liquidity in the second quarter, third quarter coming in?
No, I think we did sort of working on this. If you factor 20% growth in credit and 17% growth in deposit, and consider the liquidity in the system at this point in time, it's more than 100,000 crores. Even if you suck out 25 basis point by CRR, looking at the way the credit grows in the first quarter and second quarter, and the government borrowing factor for the first 6 months, I think there should be reasonable liquidity up to first 6 months period.
Mr. Nair, बेसिक का जो फाइनल गाइडलाइन आया है उस पर बैंक कह रहे हैं कि कुछ क्लैरिटी की जरूरत है और काफी बैंक कह रहे हैं कि आईबीआई को सारे मिलकर एक यूनिफॉर्म तरीका डेवलप करना पड़ेगा. क्या आईबीआई उस मैटर को उठा रहा है? आप क्या बात कर रहे हैं बैंक कि कैसे कैलकुलेट करेंगे, क्योंकि काफी कुछ बैंक को भी छोड़ दिया गया है.
Actually, I don't know, I'd like to
बेस रेट का आपने पिछली बार भी पूछा था. तो बेस रेट कैलकुलेशन तो रीजनेबली क्लियर है कि आरबीआई ने कहा है कि ये बेसिस है और वो बेस रेट ईच बैंक को डिफाइन करने का है टू मेक श्योर दैट ये ऑर्डरली बेसिस पर होता है. द मेथड ऑफ कैलकुलेटिंग द बेस रेट कैन बी चेंज बाय द बैंक्स in the interim period, which is made to ensure that there is no chaos and we go back to the same old thing. It's demand, supply, and the base rate is only a mechanism.
Mr. Puri, infrastructure provision RBI has got down. Does that affect? Does it give ease to some extent substandard loans?
See, इस वक्त सिस्टम में लिक्विडिटी इतनी पर्याप्त मात्रा में है कि these things only help in other areas, not as far as demand of supply of money is concerned.
So broadly then, but there are the positive things. Can use those annuities as tangible security.
Yeah, it's positive. See,
Substandard is not a big problem. I mean, provisioning
no.
for unsecured substandard.
So this has been a demand from the banking industry for quite some time. As in the market, as the products which are available and as the securities which are available have changed, some of the regulation did not change with it. So security was defined as something tangible or physical. Now here you get a security by way of escrow, by way of getting future flows of revenues, etc. This was for some reason not being accepted as a security. Now that change has come about. What I was saying was that even without this change, unless a bank had an internal policy constraint of accepting this kind of business in its books as unsecured, because there are some ceilings, 50%, 20%, whatever some bank has, unless there was an internal constraint created by the bank itself, there was no reason why these were not being financed. In fact, these were being financed. There is not a single such project which had a cash flow of this kind and therefore was offering this as security, which has not been financed for this reason. It has not happened. But for the banking system as an enabler, so that all banks who have some other constraints, so that they could also participate in, this demand was there and has now been accepted. So it has made it easier, but even otherwise financing was taking place.
Yes.
So just a minute. I have a question.
And if you look at it, from the infrastructure financing perspective, I think almost 70 to 80% of infrastructure finance in this country is being done by commercial banks. It is not being done by specialized financing institutions. So they have taken the major burden of financing infrastructure. Going forward into the foreseeable future, they will continue to do that. But whether they can continue to do it into the indefinite future, there is an issue there of ALM, of long-term funds, etc.
In which case, that long-term bonds of infrastructure companies, non-SLR bonds, will not have to be marked to market if there is a residual of 7 years. Will that make it attractive for you gentlemen to buy those bonds? Mr. Puri, Mr. Kamath, what would your views as well be? Will you all be buying these bonds with any better appetite?
I'm not clear on the question. See, I think what Mr. Bhatt has said is that contrary to probably the impression, the banks have been probably the only real source of infrastructure funding. Banks are probably not the right avenue in the long run, and this is probably a bridging gap till the other avenues in terms of debt market, the pension funds, as well as refinance of bonds or SLR, CRR concessions being given are provided. That's what we need in the long run. Now, whether we buy the bonds or not, that will be a function of if that's the best asset available, we'll buy it. At the moment, it isn't.
So, इसका net impact क्या होता है? क्या infrastructure की cost कम होगी?
Just a minute. This question here is pertaining to your interactions with the governor. What is the kind of feeling that you've got for the remaining part of the year? He's already hiked policy rates. He has already hiked CRR. Going forward, has he given an indication, a hint in terms of how the economy is going to perform and what is the kind of policy stance probably that the RBI will likely maintain in terms of this thing? And also, how much of impact will banks' balance sheet be? Meaning, how will banks whether this entire hardening of interest rates and other things in the balance sheets?
Okay. It was mentioned earlier that actually the governor's view of the economy during the current year is very positive, very robust. This year the GDP is expected to grow at 7.2%. But in the current year, the forecast by the RBI is it will grow at 8% with an upward bias. Likewise, inflation as of now, say March ending, it was 9.9%. But ending March 2011, the inflation is expected to go down to 5.5%. So, likewise for other parameters, the growth of the economy is expected to be fairly robust. And therefore the concern is how to balance this fairly robust growth without allowing inflation to get in the way of growth. So which is why these policy prescription, mainly three, all 25 basis point growth in CRR, repo and reverse repo have taken place. They are, as you know, very mild, but at the same time they give the right signal and they do some kind of tightening up. And as you know, that it is not necessary for the RBI to wait for a subsequent monetary policy date to make further changes. If required, it can be done in between also. So the signal that has been given to the market is absolutely right, that they are concerned both about growth and inflation, which is the right thing. Unlike, some people who thought that if the RBI is so much concerned about inflation, it may take steps which may actually increase growth. They have not done anything of the kind, and therefore it is unlikely that in the future also they will do that kind of thing. So this by itself is, I think, one of the most positive signals that have emanated from RBI